Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, in June 5th. We got a few news here. So, just one economic news release scheduled for today. It's the ISM 9 manufacturing, or also known as the services. Talk about the services industry for May. Now, back in April, we had a 53.5%, which means that we're still kind of very slowly growing. So anything above 50 is still growing. Anything below 50 is contraction. So they basically figured for May it would be about the same. So there's a slight uptick at 53.7. So that news is kind of helping the markets out a little bit as the stock market's up slightly. It's very light trading, so it's kind of going back and forth a little bit. So the Dow, S&P, and Nasdaq were all up slightly. Other economic news, there's a couple of trade acquisitions that are kind of also helping a little bit. Starbucks buying Bay Breads, a few other acquisitions and stuff. So another item to note was looks like Chase could be hurting a little bit more than people anticipated. They're talking about that $2 billion loss. It's actually could be closer to $4.2 billion. So maybe Jamie Dimon could keep his mouth shut in the media and pay attention more to his business and not have to lose so much on the derivatives and stuff. So perfect timing when they're talking about the Volcker rule, trying to implement that. And so you might see more regulations on the bank, especially in that arena because of those losses. Because obviously we don't want to be bailing them out again. Another item to note is the euro crisis continues. It's kind of like a long drawn out drama here. They had the G7's we're had a teleconference today. Not much was being reported on that. There's reports coming out that China's preparing for worst case scenario of Greece potentially exiting. Greece has their elections coming up June 17th, so you see a lot of people kind of waiting to see how that plays out. Spain basically said they're kind of out of the markets because their cost of the yield premiums on their debt is increasing too much so that they can't sustain it. So they're kind of saying that they're out. The European Central Bank, Draghi, basically is pleading to the European Parliament to try to unionize the banks, make it more, basically eliminate all the sovereignty and create more of a union, basically a united type of banking system, European system versus every country having their own banking system. So make it more universally, and that would probably go along the way of European bonds versus each countries having their own bonds to try to weather this storm. So whether that happens or not, a lot of countries may not want to give up their sovereignty, so that may be the issue right there. So that's what they're trying to basically come to a conclusion that may have to happen if you're going to keep the European community intact. So you got the Greek issue going on, and basically that's kind of, as investors are jittery as it is from that. Now, because of that, it kind of has a ripple effect on Spain and then potentially Italy as well. So these are all have investors kind of on eggshells, so to speak. So now we're going to jump over to the bond market to see what interest rates are doing. All right. So we had a big drop in the day. As we started the morning yesterday, it was only 6 basis points. So we ended up dropping almost 30 basis points. So basically, we did have a bit of a correction as I talked about before. We had that huge opening gap from Thursday to Friday. As we could see right here, we had this gap. So this gap was closed yesterday with this, and then we did start off a little bit lower. So we're in the 104.80 range right now. And we do have some growth to go, but the next correction we'll have will probably be right down here, the 104.40 and 104.60 range that we could potentially have at some point. Now, I do see us kind of remaining in this range for a while. This could happen once we do the bond rollover. It could come down a little bit, so we'll have the same pricing as up here. So we could have usually another 30 basis points drop and then come back upwards. But again, that could be the bond rollover, kind of help correct that a little bit. That's my feeling anyways. So right now rates are a little bit higher due to this correction here, as we have seen. And but again, the rates are still very good, but they did have a little bit of correction and did worsen a little bit. So we'll see you guys tomorrow, and tomorrow will be Wednesday. And you guys have a wonderful day. Stop by Mike's Daily Market Report and subscribe. See you tomorrow.